Good morning, January 4th, and we are live.
We are live. Good morning, David.
Good morning. This is Impact Live. We're on the Smart Money Culture TV network.
Money in the morning. So lots going on today, as it is right. Every day is an interesting day these days. It is January 4th. We're right into the new year, and things are picking up. We had some fun times yesterday out at the National Gallery of Art at the Sculpture Garden ice ring out there with my girls. I might even play a video or two in a minute. But this is we have a big storm coming in here for this weekend, which happens to
Snowstorm?
be my daughter's ninth birthday, my youngest daughter's ninth birthday. So we're gonna have a party, but we'll see, how that happens. Usually, a big storm happens right before they're supposed to pass some bill.
Naturally.
Of
Naturally.
course. I mean, yeah, of course. So I'm thinking, and I haven't really looked that closely, but there must be a new stopgap spending bill up, right? It must be. I mean, if there's a big storm coming in Washington, they need some reason why it's very important that they have to continue this resolution.
Yeah, right. Not revolution, resolution.
Resolution. And just continue as things are. Don't change a thing.
Right. That sounds convenient.
That's how they roll.
Yeah.
Now, if you have been paying attention, most of you know that, of course, we can control a lot of the weather. I'm not saying we have total control, although we probably do. But back in Vietnam, we were controlling the weather and changing the weather in order to make it rain on the Viet Cong. So they were
Yes.
all muddy. And
Strategy.
yeah. It is what it is, right? I was over in Dubai. I don't know if you were with me, but they put out the news to everybody. They said, "Hey guys, we're going to seed the clouds, or whatever they called it, but we're going to make it rain." And it's totally normal over there. Everybody knew. Oh, okay. And man, I'll tell you what, it rained, and it was so nice, so nice.
New Year's last year, it's good luck to rain on January 1st. Man, they had the heaviest rain you would have never seen in the tropics for like 3, 4 days.
Isn't that funny?
Yeah, so I think it
Well,
worked.
over there, it's not a secret. Although I will say, I went live at one point, and I told everybody it's not a secret over here. They're making it rain, and they didn't let my video go live. They held it for 30 minutes or something. And then finally they let it go. They're okay.
Naturally.
It was all just a coincidence, I guess. Anyway, Monday in the morning, we having the continued pullback, right, on Bitcoin. We saw we were getting a pullback in the morning as we were talking, and then almost right after the show, it was like they waited for the show to be over. They didn't want to talk about it live, and then boom.
Mm-hmm.
And it did seem, of course, well, we had the terrorist attack in Iran, in Kerman, right? We had the terrorist attack there. And simultaneously, of course, the markets went down. Now, the interesting part about all this stuff is that, of course, there's people in the know. The intelligence agencies, of course, I would say, are in the know on these types of things. So you have the market, it was supposed to pull back. Of course, we were talking it was probably going to pull back, and of course it did. So some of the things we talk about over the while, that a lot of times outside factors will play into these charts. We'll pull Matt on here in a bit, but that almost always lines up. So that's pretty interesting. And pray for the people that were hurt. That was a terrible attack there. Dow Jones futures are up slightly, basically flat. They were down decent amount, good 100 points, a few hundred points. take that back. So they've been pretty much up all night on the Dow futures. Hey. So that would kind of point to a decent day. Let's look at the Asian stock markets here, which again I think are okay. They're a little tepid. We got the Shanghai, the China one down 0.5%. The Nikkei, the Japanese, again down about 0.5%. Shenzhen down 1.24, and overall down. Looks like we're down today. Yes, yeah, I know. I'm getting messages from some of our people viewing on TV. Tell us more about the weather manipulation. They want to know. We should start. I'm gonna put up a website here in probably over the next week, and actually on Impact.live you can go there, and you can talk to us there. You can leave some messages if you want to ask questions. It's an easy way to do it. You can also message us on X, on Twitter, at Networks Manager. We're live, and of course David is Sir David Porter, at Sir David Porter. Matt Dixon, who joined us shortly, is MD Trade, at MD Trade. So then let's see here. We got Bitcoin. Bitcoin is, Bitcoin, it moved a lot. I mean, a lot for Bitcoin, right? I mean, it dropped quite a bit there. I mean, it was instantaneously. And this is, again, like we talk about, guys, these are unregulated markets for the most part. And, you have a liquidation. We call them a liquidation, not a spike, a liquidation, what's the word we use? Wick. It's liquidation wick. Boom! It goes down. So Bitcoin was sitting over there above 45. Bam! Went down to 46.20. So if you're leveraged long, let's say you have a 5x leverage position, and you get a 10% move, well, that could feel like a 30% move depending. Okay. Solana, boom, 30%. Went from like 105 to 77. Litecoin, 30% move too. Boom. XRP wiped out a lot of people. It was a lot of people. People love to trade XRP because it does have these meteoric rises, and everybody knows that XRP these are the central bankers. More than likely, the guys who are printing the money are going to have a successful coin. It doesn't mean that it's going to go up, though. As we talked about yesterday with Matt, there's an unlimited pretty much supply. There's billions and billions of XRP. And there's going to be more. They've only dropped half of them. And I don't think there's any max as well. I think they can continue to, it's one of those that they can continue, although they did bring it up. XRP went from 64, 63 cents to 46. There's a lot of people crying. Use your stop losses, guys. Especially if you're margin trading, use your stop losses. That'll help you. That'll save you a lot of tears. In world news, we have, of course, the Kherson bombing, which is not good, in my opinion, unless you're a war hawk and you want war. I'm not a big supporter of war. I think people that don't go to war are happy to send people to war. But if you go to war, you don't want to send people to war. And it's, that's pretty much how it is. Peace is always, we should always take the path to peace. And there's billions and billions of people out there, and our little 300 million person nation should not think that we can just wipe everyone out, because it won't work in the long run. Let's see. Baghdad attacked, 4 missiles, 2 dead, 1 injured. This is fresh off the press. 3 missiles were fired at PMF headquarters, and the 4th targeted the car of the commander of the Baghdad belt. 2 confirmed dead. So these are attacks on the forces in Iraq, U.S. forces, I think, from what I understand, and as well the local military there. The site of Soleimani's death. So, of course, Soleimani was the guy who was working for Iran that was assassinated years ago. So that base was hit again. Guys, this is blowing up. I will say that when this bombing happened, it was a terrorist attack. It was remotely detonated too. So, likely a sophisticated entity or entities, I would say, did that. Our wonderful community, right, that we have. When that happened, I thought, well, here it is. This is really now. I mean, we've been basically in World War III. We've just been in denial. But I thought, this is it. This is World War III. How can Iran not respond? They got tons of people dead. They have bombs exploding near their mosque because they're mourning their guy. A lot of people want World War III, guys. War is profitable. Unfortunately, war is profitable. And yeah, that's it. So I think that this is going to push this. It's going to push this war. And the truth is that we've wanted I wouldn't say we, but the U.S. powers that be have really wanted a war like this for a while. Iran was one of the countries that we have been targeting. I'm going to pull up an old video here. Because this is General Wesley Clark, and he talks about how we got into this. Hold on, here we go. Share my screen. Very short video, but it's an important video. We all need to, well, in my opinion, we peace is always the way to go, guys. Peace. We want peace. Let's see here. Pull this video up here real quick. This is Wesley Clark about 30 years ago, talking about why we went into Iraq, but he names where we're going, what we're doing, what the plan was.
To worry about Iraq, not Iran. I knew why, because I'd been through the Pentagon right after 9/11. About 10 days after 9/11, I went through the Pentagon and I saw Secretary Rumsfeld and Deputy Secretary Wolfowitz. I went downstairs just to say hello to some of the people on the Joint Staff who used to work for me. And one of the generals called me and he said, "Sir, you got to come in. You got to come in and talk to me a second." I said, "Well, you're too busy." He said, No. He says, "We've made the decision. We're going to war with Iraq." This was on or about the 20th of September. I said, "We're going to war with Iraq. Why?" He said, "I don't know." He said, "I guess they don't know what else to do." So I said, "Well, did they find some information connecting Saddam to Al-Qaeda?" He said, No. He says, "There's nothing new that way. They just made the decision to go to war with Iraq." He said, "I guess it's like we don't know what to do about terrorists, but we've got a good military and we can take down governments." And he said, "I guess if the only tool you have is a hammer, every problem has to look like a nail." So I came back to see him a few weeks later, and by that time we were bombing in Afghanistan. I said, "Are we still going to war with Iraq?" And he said, "Oh, it's worse than that. He said, he reached over on his desk, he picked up a piece of paper. He said, I just got this down from upstairs, meaning the Secretary of Defense's office today. And he said, this is a memo that describes how we're going to take out 7 countries in 5 years, starting with Iraq and then Syria, Lebanon, Libya, Somalia, Sudan, and finishing off Iran. I said, is it classified? He said, yes, sir. I said, well, don't show it to me. And I saw him a year or so ago, and I said, you remember that? He said, sir, I didn't show you that memo. I didn't show it to you.
Well, there you go.
Mm-hmm.
So, yeah. That appears to be the way we're going. And so things going to be volatile. You saw what happened yesterday with the markets, up, down, all around. I think that's going to continue to happen. Watch your leverage trades. Watch your military stocks, defense are going to continue to go up. But watch your money, because they're also going to keep printing and keep printing and keep printing and keep printing, because they can't help themselves. We're going to talk a little bit more about that. Let's bring Matt Dixon on, the main man, the man of the hour. Hello,
morning.
Sir Dixon. How are you?
Matt.
Morning, David. Good morning, Bruce. And good morning, Texas and the world. Good to be here again. As you say, very... I don't like to say, I say interesting, because there's actually a common saying, isn't there, about interesting times.
I know.
Yeah, you could say they're interesting. They're also very worrying, aren't they?
They are.
So we've seen all these problems going on about, what's going on with Iran and, Iran-sponsored proxies around the Middle East. And we're also seeing, I don't know, it was in the news today, about Turkey and Erdogan getting involved with Russia. And there's a lot going on. They're all kind of interconnected, and it is. I think it's all the ingredients are in there in the pot, and it's stirring, and it's looking like it's going to be quite a potentially a worrisome 2024. But we don't know. You never know when things are going to blow up. But that is one major concern. Another one is right back in the crypto world. We looked at yesterday what were the reasons behind the pullback, and there's Matrixport, isn't there? The Singapore-based crypto financial services firm, and they came out with a report saying that the ETFs are going to be rejected by the SEC.
Oh, yeah.
We don't know what news is.
It didn't appear to be coordinated. It was like, you have the bombing, you have this report, FUD as we call it, maybe coming out. If you were in the know, you put up a massive short on Sol or one of these. If you were leveraged, you made 100x, or not 100x, but at least 1 or 2x.
Yeah, it was actually quite interesting. Yesterday, I put up a chart for dollar index, if you remember, and I showed that we're actually rising from a very important Fibonacci retracement, and rose from that level in 5 waves, and we still had a 5th wave higher to go. And that appears to be, and again, I don't know whether I showed the inverse correlation with Bitcoin. I think I did. I'll show it again today. Really, really interesting that those markets are inversely correlated. And when we saw the dollar strengthening, that tells you there's something happening behind the scenes, that you're probably going to get a reaction in the crypto and risk asset market. And I also touched on, I'll just revisit it today, I did touch on the S&P 500, didn't I? And just said that that was actually also a very important turning point. So I'll do the usual momentary switch as I share screens again. And I think we should be there quicker than usual today, hopefully. So,
yes.
Yeah, actually what we'll do, we'll go straight to, I think, go straight to here. So here's the S&P 500. So we talked about this yesterday, and we showed the 5 waves. And if you remember, I said the 5th wave cannot be longer than the 3rd wave. And so it had to end just before, and it ended a few dollars before. And we can see some, they call these, there are candles, the names for candlestick patterns. So this one's actually quite a bearish pattern where you get 3 large red candles to the downside. So potentially that's showing a bit of potential short side, but where there were some really good indicators here that told us that the market was about to turn. So not only did we get this one showing that we couldn't go beyond this level on the fifth wave, we also got what's called bearish divergence. And what you do here, you can use any different oscillator, but I got an oscillator here called RSI, Relative Strength Index, at the bottom. And you can draw a line from the peak to a lower peak here. And this peak actually showed, by the way, that the market was overbought and that there's potential for the market to decline from there. And the RSI, the volume actually declined, but interestingly, the market continued to go higher. Now that's a really interesting sign because it's telling you that there isn't volume behind this final move in the market. And what so often happens, we see this big red candle here before the move down, before the main move down, so a big red candle. That's often telling you that the institutions are actually bailing out. They've been involved in this massive run up in the market and are actually taking profits, and that causes the market to go down. But the retail traders haven't yet got the message because they're not quite so in the know about what's going on in the markets. So the retailers continue to buy the market higher. So what's happened is the institutions have sold off, drove the market down this little bit, but the retailers haven't got the message and they're still buying. And so that's why the volume is declining, because there's no institutions buying. It's just the retailers buying, pushing the market up for this last little bit of a high. And then we get what's called bearish divergence, regular bearish divergence in this case, where you see higher highs on price, but lower highs on volume. And that's a warning sign telling you that it's probably a fifth wave. The institutions are out the market and it's actually time to get out. And you can see that would have been perfect timing if you'd followed all these indicators. And, you know, I've been in this trading world for well over 30 years now. And this is a really solid way to, you know, you look for other indicators as well, but I normally look for bearish divergence. So you can look for regular. There's another one called hidden bearish divergence that we can look at. There's all sorts of indicators that give you a bit of a, you know, tip you off as to what's about to happen. It's not 100%, markets never are. And we'll look at what happened with Bruce's coin later on. But here's DXY. This is the big picture. We're still in a big uptrend DXY. That's telling you dollar is still likely to strengthen long term. And even short term, we're probably looking at a bit of dollar strength. And we've seen that. This is actually just from a few days ago. We've already seen that. So it just shows how predictive these charts. Somehow we were able to plot in advance that we're going to get a move up here. And we can move on very quickly and see, here's that move up. So this is actually looking at it in more detail. And we got that move up from this very important Fibonacci retracement here. Exactly on the bottom, we got the move up. That was telling us there was going to be a sell-off in risk assets. So before it happened, we had a warning sign. So before the sell-off yesterday, we had the warning sign. So time to make sure you've updated your stop losses. Maybe you had a stop loss on. Maybe it's time to tighten that stop loss. Lock in some of those profits. Make sure if the market does dump that you're going to be protected. So these warning signs are there. And here's one we talked about. I just mentioned to you about we had regular bearish divergence. This is one called hidden bearish divergence. So regular bearish divergence tells you about a change in the direction of the market. Hidden bearish divergence tells you about a continuation of a larger trend. So here we can see the trend is downwards on the price. And we had actual higher highs on RSI, corresponding RSI. They have to line up perfectly, which I have here. So you can see that whilst we had 5 waves up on the dollar index showing us dollar strength, we're now beginning to get a pullback. And this was signaled with hidden bearish divergence here showing a continuation of downtrend. So this is telling you that we're going to get a little bit of recovery in the markets, which is actually what we've seen with Bitcoin and with cryptos. You know, you talked about the lows yesterday of, you know, the lows were quite substantial on XRP, on Litecoin, on Bitcoin, on all of these tokens. But we got a recovery, and that was signaled again in advance by dollar index here. So, you know, you can follow these charts. They're very good. They're not 100%, but they're actually highly predictive. So you don't need to be 100%. If you use your risk reward, they're the tools of a trader. You can be profitable long term. Here's the token we talked about, ICP. again, there were signals there telling you that potentially ICP was due for a turn. Markets don't go all in one direction, and I see pullbacks as an opportunity. Some see them as, they hate pullbacks in the market, but they're actually opportunities to dollar cost average, perhaps, opportunities to take profits and get back in at a lower level. So the market is full of opportunity. It doesn't go in a straight line, and you can get much more out of the market if you understand the dynamics of the market, of charting, how things work. So we've had these amazing Fibonacci extensions, 1.618, 2.618. Even here, we have, I measured from the bottom here of this wave, we had an ABC down, measured up to this wave, that's 100%. If you transpose it to here, it gave you the exact top of this wave here, 2.618. That tells you that that's a wave 1, 2, 3, 2.618. Wave pullback in 4, and a fifth wave higher. So the market was crying out that we're at the top of this little cycle. We've probably had an A down, a B up, and we're probably going to get another little push down before we then push again higher, at least another push down. So again, you can see these things in advance, once you've got experience. And we can look at, the volume in the market. This is Ethereum. We can see these red candles are negative, selling volume, basically. And we can see it's been increasing recently. You can look at the dates here. From 10th of December, we've been seeing some increasing selling volume. That's telling you that there are some sellers in the market, and potentially we're at least a short-term turning point in the market. Here's the volume on XRP. And look at this massive sell volume yesterday. Now, that is telling you we're either in basically a bit of a turn in the market, potentially starting to go down. So these are indicative of either a market turning down, or sometimes they can be a sell-off wick, as Bruce mentioned just a few moments ago. You can get these big wicks downwards. They can be a positive thing. So there are two ways you can read this, and you need to look at other indicators to determine which one it is. Here's that chart I just told you about, the inverse correlation, and just look at it. It's amazing. It's like looking in a mirror between the dollar index here, the top chart, and Bitcoin, the bottom chart. It's like looking in a mirror, isn't it? Whereas one's going down, the other's going up. It's not a perfect correlation. You can't use it day by day. But overall, generally, if you know where the dollar's going, you can have a really good idea of where you're likely to go with Bitcoin. And so we have seen, we got a sharp rise in dollar index here, and we got a sharp sell-off. And the rise, by the way, in dollar index was slightly ahead of the sell-off in Bitcoin. So there may even be a leading relationship there. So that's really sort of predictive, really useful for a trader. So here's the XRP. And interestingly, we have I was looking at a small little internal triangle, but overall, I had this labeled weeks ago on my Twitter at MD Trade. I had these labeled in, these trend lines. So you can see from the bottom we had, and it's just amazing that you can see from the bottom to the top here is measured as 100%. The 0.618, you can see where it is here. This is the 0.618, the golden ratio. And you can see that it aligns perfectly with this trend line between the top of the price here and the top of the price here, and a potential projected top of the price here. But also the lower line, actually you have a base here, support line. And again, yesterday, look at how it spiked down and touched support. Isn't that amazing that we had that support line drawn on probably 4 or 5 months in advance, this second touch here, and it gave us an indication of where support would be if we were to get a strong sell-off in the market. And again, I had this labeled that we're likely to get a potential turn round about the 10th. And that's what I've got labeled in here. And this is where potentially ETF day, potentially get a decision. I know Matrix Port said it's going to be a negative decision. I doubt it, but we'll see. Who knows? But this is just amazing that these trend lines are so predictive, telling you the boundaries of where price are likely to go and the boundary of where it might go up to potentially here. So, again, from a risk reward perspective, you might want to get in with a stop loss just below, tiny bit of a potential loss, but a massive potential upside. So that's, here it is in a bit more detail, the XRP, and you can see the spike down there, almost touch. We may even have a bit further down to go, who knows? But just from risk reward, it's looking quite good. Here's Litecoin, Bruce's favorite, and it's looking really good yesterday, wasn't it? We're in this long-term uptrend,
Yep.
pushing up. But this is what's so important about trends. I mean, the point to get into this, by the way, was near the beginning of the trend, way down here. What I always do when an asset moves into a reasonable profit, I'll actually move my stop loss just to guarantee, even if it's only $1 profit, I'll just guarantee $1 profit. And then if you get a sharp sell-off that breaks a trend line, you're okay because you're going to take a profit no matter what. So this was where we were yesterday, and just look at what happened during the day. We got, this is a sort of support line that we have here, and we can see the massive breakthrough. So as I say, you use these as risk reward. These are your barriers for risk and reward. So if price drops below, then clearly if you got in earlier at one of these levels earlier on here, possibly here was probably the ideal sort of entry point around here, you'd be guaranteed a small profit even if the price breaks through. So once it breaks through a support, support is broken. So these are the potential turning points for markets that they don't always go in a straight line, and sometimes it takes a catalyst. And the catalyst may have been those bombings yesterday. It may have been the news from Matrix Port. It may have been just the fact that the market was overbought and we'd had too much of a run over Christmas, New Year, and it's time for a bit of a pullback. Whatever the reason, these sort of barriers here, these support lines and resistance lines are absolutely key to your trading. And if they break, it's a sign that potentially the market's going to go further. So right now, we're in a bit of no man's land. We'll see where it goes from here. But that's a bit of that's it for today. I know I wanted to talk to you about Solana. We'll probably leave that for another day. But I've even got another token, which is actually yet to come out. It's a new chain, which is going to be amazing. I'm going to tell you about how amazing Solana is in so many ways, but also some of the challenges that they have with the Solana chain. There's a new chain coming out. I won't tell you who it is. We'll leave it for an amazing sort of expose of an opportunity in the future on a future show. But it's a chain that has even higher transaction speeds, greater security, amazing potential, and that's one we can look to in the future. So that's a wrap for today, Bruce. What do you think of the markets?
Awesome, man. Well, I'll tell you, it's they're never, first of all, they're not for the weak of heart, right? And they're never boring. The markets are rarely boring. I think that usually when we see this wick go down, even if it bounces back up, you see it retest, it revisits almost always. And it doesn't always go under, and it doesn't always make it all the way down. But whether it's going to go up from here and turn around, or it's going to continue going down, we're going to see it come down to the levels that it touched most of the time. And so if you're trading, I think keep that in mind. If you do want to enter in, keep that in mind. It's a
yeah.
I don't know if I'd use a whole. Go ahead. I don't know if I'd use a whole lot of leverage right now.
Yeah. I mean, you talked about leverage and you talked about 5x. I mean, I trade sometimes on leverage. I trade spot and I trade futures. When I'm trading leverage on crypto markets, my absolute maximum is 3x. And even 3x, you can very easily be wiped out. When you talk about the 30% drop and you got to hold your margin, etc., you can be wiped out in a day. So 3x for me is an absolute max. I think 2x is if you're going to go leverage. I actually think crypto markets, you don't even need leverage because there's so much volatility there. Traders love volatility. But once you start leveraging, you're actually opening yourself up to market makers who can spike prices. As you say, sometimes they can move the market with a certain volume of capital, and they know where your stop losses are. They know where your margin call will be. And so they can move the markets, not you individually, but they actually have a picture of everyone in the market effectively on their market. If they're a market maker, if they're an exchange, they've got a very clear picture of where the body of stop losses are, where prices would need to be. So potentially the big whales and the big market makers can move prices and effectively just mop up your money, mop up your stop losses, take your money. So this is why you need to know where they are.
100%. And, we talk about one, of course, the exchanges themselves or the group, if they are going to make a certain amount of money by by liquidating, and that's more than they would make otherwise, then you have that. But you just have the fact you have guys that want to move the price up, and maybe you have a whole bunch of if you have a whole bunch of that asset, and they know that they're going to have to cash that in at a later date at a much higher price, then it may make sense if they're smart enough to look, and these guys are smart, these market makers and whatnot, they're in those markets, they know what's going on, and it may make sense to try to get those coins off your hands at a much lower price.
Yeah, the one thing I mentioned that I really would keep a close eye on, and I think it's one of the most powerful trading tools, is looking at those divergences. So it's something that I actually highlight when I see a decent divergence. I'll post it on my Twitter, as I'm always saying at MD Trade, but I'll post it on there because those, both the conventional regular divergences, and the hidden divergences, are very, very powerful signals, especially when you combine them with a couple of other signals or candlestick patterns. It can tell you pretty precisely, and you combine it with Fibonacci potential turning point as well. That's, if you combine 3 signals there, it's very, very powerful. And and then you have in the back of your mind, where is the overall market? Just have a feeling where the market is. Well, we know that the market is a little bit overbought at the moment. We've had an amazing run. There's a lot of people holding profit. And there's actually a lot of enthusiasm that's followed through with the Christmas New Year rally, and people are sort of piling in. But the thing is, it's based on the news. And as we mentioned the other day, Warren Buffett, he said basically, sell when there's fear. Buy when there's real fear in the market. Sell when there's real greed in the market. And so we're seeing real greed in the market where people have been making such amazing profit over Christmas, New Year, and that is the time to be selling. But unfortunately, we see from that divergence indicator that the retailers are still buying, pushing the markets up that last little bit. But the institutions, or the big players in this case, the whales, have actually already sold out. And that's why you got that red candle in the first place. They've already sold out. They've taken their profits, and it's just the retailers pushing up that last little bit. But then there comes a point when the big players, they're not just out of the market, they actually come in and short the market, and they take a catalyst like the news that we've had as an excuse to sell the markets. It's almost like an excuse. But that's exactly what happened, I think, yesterday. So whilst a lot of retails had a lot of pain yesterday, some of the big players, some of the whales were probably rubbing their hands because they've actually seen it coming in advance.
Absolutely, 100%. And then as I know you mentioned as well, China, and we also are, right, you mentioned China or Russia. You mentioned Russia, and then I also wanted to mention that China came out with an official statement on what happened over there in Iran as well. God bless the people that got hurt, and basically we stand with Iran. So this you have now, I mean, these major players, Russia, U.S. largest military, Russia is number 2. I guess China is probably number 3. I think India is right after that. Major players. We have all the big forces in play, and that'll spook the markets. And these guys, money is, there's something also that I talk about every once in a while, but not that often. But there's a trick that that they can use as well to remove a lot of money from circulation, and they do it effectively, and that is on the commodities, and that's exactly what they'll do. Was what happened yesterday. So if you want to remove a lot of fiat from circulation, you crash the commodities market, and then you buy those commodities back at a lower price. And if you're the one that did the selling and the buying, you just removed a lot of value, a lot of currency, because remember, our currency is existing, our fiat dollars and other fiat currencies are existing 90% for the US dollar, almost 90% in digital. People say, oh, the CBDCs, we don't want our money to be digital. Your money's already digital, guys. What do you think happens in the bank? You get your direct deposit, your money's digital, okay? But that is a very common way, at least it appears to me, I should say, maybe, I don't know. Our Federal Reserve removes circulation from the markets. What are your thoughts on that?
Yeah, I mean, there's no doubt they manipulate money supply, they manipulate the markets, and you're absolutely right that we have digital money already. CBDCs are just another level of control. So I think once you have CBDCs, they can track what everybody's doing. So it'd be much more difficult to evade tax or to do, anything, which may be a good thing because things need to be funded. But the problem is, so often you're just funding bureaucracy and you're funding war and you're funding things that you don't want to fund. So there's some positives and negatives with CBDCs. There's the fact that they can see you is not such a good thing sometimes, but also we can potentially see them. So perhaps we can hold them to account. If there are CBDCs, then potentially we can see blockchain transfers and actually see where the money's going, where there's corruption within government. So there is a potential positive to CBDCs as well that maybe people haven't considered.
I think the more I thought about it, because everybody's all uptight about the CBDCs, and I think they already control your money, guys. Like, you got your Visa card, you got your debit card, you got your bank, and yeah, of course, maybe you have a few tens of thousands of dollars in cash, or maybe more. I don't know. But cash, guys, cash one day, as we talked about yesterday, is going to go to zero. One day, your paper dollars will go to zero. This is no fiat currency has ever lasted forever. So your fiat money is going to go to zero. Your paper dollars, one day, hundreds of years from now, they're going to be digging up stuff or whatever they do, and they're going to find a bunch of paper dollars and be like, those people, these things are worthless. And like David was saying yesterday, we have you have your old coins and your metals, and now probably it looks like blockchains like that are mineable and that have a restricted supply, like Global Blues, like Bitcoin, like Litecoin, like we always talk about, and some other ones. Those may be worth something, but these paper dollars are not going to be. So yeah, I think that it's like the boogeyman. Oh, CBDCs. Don't get into those digital currencies. Don't get into the Bitcoins because of the CBDCs. And CBDCs are not Bitcoin. This is something totally opposite, really. I mean, we're using some of the same technology. We're using the same technology, but not the same way. And actually, the point that you brought up about the public, maybe that's why they haven't started the CBDC. Because the public, at that point, may be in a position, they should be in a position, one would think, to audit the Fed.
Yeah, maybe that's why they haven't come out just yet.
Right?
Yeah.
You heard it here first, folks. Impact Live, Money in the Morning. They may never come out with the CBDCs. It's just the boogeyman to get you from buying assets that can't be frozen, can't be stolen, can't be stopped, and can't be seized by court order.
Yeah, and it's, technophobes are avoiding this, and they have been avoiding it. And you can see people, even the big institutions, actually turning around, changing their opinions, now holding, substantial amounts of Bitcoin, Michael Saylor and so on and so on. Some of those big financial institutions now holding Bitcoin, and it'll just open up more and more with ETFs. So it does make sense to diversify. And we as retailers had the opportunity to get in early when they cost next to nothing and to dollar cost average. And we can still do that when we see pullbacks like yesterday. And even if we see a deeper pullback, you don't throw all your eggs into the basket, put all your eggs in one basket. Don't go all in one go. Dollar cost average, but diversify. Don't go into one single asset. There's, as I said, I'm going to tell you about some amazing opportunities. A new chain. There are other chains that are really interesting that have advantages over Bitcoin even, although Bitcoin is the granddaddy of them all, of course. But there are others. Don't put everything. Don't always believe in one thing. Just do diversify. I mean, Solana. If you're just stuck on Bitcoin, you'd have missed the 10x pump on Solana. I missed out just a couple of months ago on the big pump we had in XRP because of the SEC news. But we all knew the SEC were going to come out with that news. So maybe it would have been prudent to just have a position there. So dollar cost average, hold your position. And when the news came out, you could have done 2x overnight.
Dollar cost average, guys. Dollar cost average. This may be the strategy, the most important strategy that you use for this whole thing. because as much as we can chart and as much as we're in tune with what's going on, it is still impossible to predict exactly what's going to happen. And not only that, but to predict how far high and how far low it's going to go.
There's actually no way of absolutely predicting, but there are ways. As you say, dollar cost averaging is probably one of the most important tools that you can use in building your financial future, building your portfolios. And the other one, as I say, I keep saying, is diversification. And there are ways to diversify. It's not just throwing darts into a dartboard of different assets. It actually can be planned and can be done in a proper theoretical way. And actually, that's something we do at eVay. And I know I don't mention eVay a great deal, but we've done some amazing work. We're actually we're publishing in a leading scientific financial journal, because there's some scientific theory out there, work that was done years ago, Nobel Prize winning work about asset allocation, about what's called the efficient frontier. And this is how you build portfolios in the most efficient way to get the best returns for the amount of risk you're prepared to take. And these are things that we're launching in Q1 through eVay. And again, hopefully we'll have a chance to talk about it, because it does make a difference to your long-term financial health.
Awesome. Well, us, we're huge fans of eVay, so we want to use that as much as possible. Excited always to collaborate on the different things. One of the main reasons for this show is to reach out to people, and we're just really beginning, and super excited about it. So awesome.
Great.
Yes.
Well, tomorrow, let's see if we can have some time and get into Solana, because it's a very exciting chain.
Yep, I think we'll see how the markets go. We'll be touching base on a lot of stuff. I'm going to dig in. I'm going to show a couple of videos and stuff from our skating to lighten things up and then hammer it down.
Great stuff.
Matt,
I love the variety.
Thanks, man. Always a pleasure.
Thanks,
Fantastic.
David. Thanks, Bruce. And thanks,
Thank you,
everybody.
Matt.
Catch you soon.
See you in the morning.
Bye-bye.
Okay, so I'm going to share my screen over here. I had a fun day out at the National Gallery of Art Sculpture Garden Ice Rink yesterday with my two daughters. So I'm gonna share that. This is us here. We're so Bella is she's turning 14 in March, and of course that's Penelope down here, Isabella, and then and that's Penelope, my youngest daughter there. Beautiful out there. If you guys get a chance, you got to come. If you come to DC and it's in the winter, you got to go skate at the National Gallery of Art Sculpture Garden Ice Rink. I mean, it's a national treasure. It really is. And if you're there in the summer, they do all kinds of jazz concerts and everything else. It really is great. And it's right there by the National Mall. So you really can't miss it. Beautiful place. So, and then I think most of you guys know me, but if you don't know me, I was Twinkle Toes there for a bit. We call this the Jesus List.
Headband.
That's the National Archives in the back.
Gorgeous. I'm over here.
That's Bella
Gorgeous.
talking in the background.
360.
I still got it. Aw.
Awesome.
One of the joys of my life, really. To be
Prepare
able
for
to
the
play with my
headband.
daughters. But you see, this guy's beautiful.
Gorgeous. I'm over here.
Beautiful.
Gorgeous.
That looks fun.
Yeah, right?
360.
She likes that. She likes that. And then let's see here. I haven't done spins in a little while. So
Who's watching? So
this fella here. You see this setting, absolutely amazing.
Yeah, it looks like a gorgeous day.
Oh,
Oh, wow. Nice.
I didn't go for the full sit though. I need to get back. So Bella and I have been skating a little bit more since I've been home. And then we switched feet here. This is called the Rubik's Cube, is what we call it.
Whoa.
Yeah. We'll get it. We'll practice this. Remember how this looks now.
Watching, so like.
But as you get older, and your daughters, your daughters love their dad. It's one of the most secret relationships in the world. Father and their daughters.
Right.
That's funny. And now she's like, I think she's bigger than Mom. I think she's a little bigger than Emmy.
She's taller than her, huh?
I know. Yeah. And Emmy, of course, and I skated for years. We hit the international circuit for a little while.
Yeah.
Ha 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 ha
Who's
ha.
watching, so like.
Nice.
Anyway, yeah. So but I think it's good. It's really important, especially in times like this, that we focus on what's important. The whole world is going crazy. Are we going to get hit here at home? I don't know. We might. I hope not. But actually, more than likely will. I mean, I don't know if you guys saw, they kind of kept it a little hushed, but the morning where we had the earthquakes here in D.C., I guess they stopped a car full of bombs in New York City. Some guy was going to blow some stuff up.
Jeez.
So you never know when your time will be. And so you got to you got to stay close to the people that you love. You got to help out the people that are relying on you, like your kids. You need to have kids. Another really important thing. I love that Elon Musk is now talking about having kids, because that was a big no-no when we were growing up, especially me. I think you too. Don't have too many kids. We're overpopulated.
Yes, of course. And
Meanwhile,
don't have them too early.
Yeah. Don't get married too early.
It'll ruin your life. They made it say.
Ruin your life. What better could you do in your 20s than party?
Yeah.
Like, it's the wrong message, guys. Have kids. The best thing you do in your 20s? Get married and have some kids. You do that, by the time you're in your mid 40s or 50s, you're done. You're not like me. But it's still fun. You don't want to be done. So a couple of things did want to touch on as well. I talked yesterday, they came out with this figure of 34 trillion. We're now $34 trillion in debt.
Not too bad.
$34 trillion. Did you say not that bad? We're never going to get out of debt as long as we're on the US dollar. And that is just the facts.
Well, if we keep making babies, we could get out.
If we keep making babies, we could get out, David says. Well, I like the process. We're never going to pay off the national debt because every dollar is borrowed. Our monetary system is a facade. Every dollar that you use, every dollar that's issued is attached with some sort of debt. So on the $34 trillion that they are now saying we owe in our national debt, they're saying that the interest payment on that, which is the yearly interest payment, on the $34 trillion in debt is $1.1 trillion. They only took in around $900 billion in federal income tax. So the interest that we're now paying, the 1.1 trillion yearly on the 34 trillion in debt, we didn't even take in on income taxes, which I've said before is basically just the burn. They don't need it. They just want to remove it from circulation. And now I hear talk that they're going to, President Joe Biden wants to increase this tax up to $4 trillion. $4 trillion. Why? Because they need to move it out of circulation. Now, The reason why, so if you take that number though, 1.1 trillion, and you do the math of 34 trillion in debt, and you say, okay, it's 1.1 trillion to service that debt, you come out with a number of around 3% of what it's costing for every dollar that we use. Now, again, we don't need to borrow the money from the Fed. We don't need to borrow it, but we're borrowing it. So for every $100, if you take that number, for every $100, we're paying $3 to the Federal Reserve, which is owned by a bunch of private families who you don't even know, and there's no accountability for these people. But how in the world can we ever get out of debt if every dollar that we use to pay back the debt carries debt?
It's a terrible system.
It's a system of slavery. We can't use our own money. Well, what is the answer? Well, the answer, guys, is gold, silver, Bitcoin, Global Boost, Litecoin, real blockchain, real assets. Your dollars are going to zero one day. Now, it could be 100 years from now. I don't know. But they're
Unless
definitely going to keep inflating in the short term.
Unless you're holding silver dollars, those will be worth something. From
Those
the
will be
U.S.
worth
Treasury.
Or from the U.S. Treasury, or from wherever. You have silver, you have gold, that's going to continue to be something. The same amount of gold that would buy you a loaf of bread 100 years ago is the same amount of gold that will buy you a loaf of bread today. What changed is the value of paper dollars to that.
And that silver dollar will buy you a lot more than a dollar's worth of product today.
A lot. A lot. A lot, a lot.
So what do you want, a dollar or silver?
Silver's hot. There's no doubt about it. I'm working on a deal right now. I might fly out to Texas to talk to these guys. Working on a deal right now. We can get some at-cost metals for everybody. At cost, which would be pretty interesting as well. You need crypto, real blockchains like Global Boost, like Bitcoin, like Litecoin. Real blockchains. You need metals. And you need some cash. Cash might go to zero. You might not be able to take the metals with you. And of course, you might not be able to use the crypto either. I mean, you just never know what kind of situation you're going to be in. It is what it is. But you need all three of those in order to protect yourself and your family. You see all the news reports. The elites are building bunkers. What are they building the bunkers for? Do you think they're building the bunkers to protect themselves from the elites? The elites want to protect themselves from the elites? No, they want to protect themselves from you.
What a concept.
What a concept, right? Get involved. Our website, we have a number of them. Impact Live, of course, you can watch this, but Global Boost, with the dot between the O and the ST. Global Boost. Get involved. 10 years we've been working on this chain. This chain has been, actually, we stepped away for a couple times. It's totally decentralized. It's decentralized, and it's live. If something happens to us, it still goes on. It's pretty interesting. Just like Bitcoin, just like Litecoin. But get involved. We're now pushing decentralized media. We're doing for media, for communications, what Bitcoin did for value, for money. I hesitate to say Bitcoin is money because it's not something new. It's like I always talk about something new to the world. But get involved, diversify. And tomorrow I'm going to try it. Tomorrow is Friday, right? Tomorrow is Friday. I've been wanting to do a live how you can get some of these assets live on air, and maybe I'll do that tomorrow. If I don't do it tomorrow, I'll do it Monday. But we'll get everybody set up. Thanks for spending your morning with us again, or afternoon. 6 p.m. in Bangkok, 3 p.m. in Dubai, 11 a.m. in London, 6 a.m. on the East Coast of the U.S., 5 a.m. on TV in Texas and Louisiana. Thanks, guys. We'll see you tomorrow.
Thank you, Bruce. See everyone tomorrow.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.